And welcome back. And as promised, we do have one of our nation's leading commodity analysts with us here at midday. Of course, we're talking about Jim Bauer and Bauer Trading. Jim, welcome back to the program. Let's not waste a second more. Let's recap last Friday's very important latest round of USDA crop reports. Any surprises or big news out of it?
Well, the big surprise was the increase in corn acreage, up about 2.1 million over what the trade expected. I was listening to some farmers and ranchers from Nebraska, and I guess they felt the report was pretty much correct. I saw a big increase in the Nebraska corn acreage, much bigger than what the trade was thinking. The other thing that the report clearly said was, at least on the surface, the old crop versus new crop position should still continue to hold relatively well, particularly the soybeans, where there's still a tightness there, and they're still trying through basis and board price, trying to pull those soybeans from the farmer into the pipeline. But overall, I thought the market probably needed most of Friday and today also to get the full effect, because there's some numbers that are going to have to be revised down the road anyway.
Now, one of the highlights that I picked up was this could still be the largest corn crop since 1936. So that says a lot for the corn farmer out there. But out here in this neck of the woods, what's that mean for cattle guys?
Well, that's the good thing about the report for the cattle guys. The cattle market has clearly accepted the fact that they're looking for lower corn prices, although we've got to be careful with that down the road, because the critical time this year will still be about the 3rd and 4th weeks of July for corn and the rest of August for soybeans. But certainly I thought the report itself was friendly to cattle, and we're seeing the results of that. Feeder cattle are marching sharply higher. We've got a good technical formation, although it's a little bit overbought, but certainly it did help the feeder market.
Well, another thing that doesn't hurt is we're now into full-blown summer. The grilling season is underway, and the beef industry is still doing a pretty good job of promoting themselves.
Yes, the last time I was on here, you and I talked about that we really need a promotion, and we got it. And you can see the effect of that. It comes into the marketplace immediately, and it had a nice, strong up move and a real positive benefit to the beef market, in my opinion.
Finally, let's talk about the wheat number. USDA pushed the number higher just by a little bit. Harvest continues to move north. What do you think there?
The report itself was pretty much, in my opinion, neutral to wheat. And of course, the harvest is ongoing right now, but you and I talked off air. As soon as that harvest tends to get to the northern tier of counties in Kansas, the #1 producing state, over all these years I've kind of watched that there's a kind of a general tendency or seasonality for wheat prices to kind of bottom out and start moving back to the upside, recognizing as they get north of Kansas, the #1 producing state, the yields and the production start to taper off a little bit. But the report itself was, in my opinion, neutral to wheat.
All right. As always, some very useful and valuable insight from Jim Bauer and Bauer Trading. Stay with us. We'll have those ag markets coming up next.